Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, November 14th. Today, after yesterday's CPI, we got the PPI, and as you can see, it's a little bit as expected, but the core PPI, it's showing in the year over year a little bit of increase from 2.9 to 3.1. So that's basically the reason why the stock market is currently experiencing a mixed outlook, presenting both positive and negative signals. The overall market sentiment is uncertain, making it difficult to predict the future direction. There are some positive indicators. For example, the US 30-year fixed rate mortgage decreased for the first time. That could benefit the housing market. However, there are also concerning signs. The US Treasury plans to sell a substantial amount of new debt in the coming weeks, potentially putting upward pressure on interest rates. And furthermore, the potential elimination of the EV tax credit by the Trump administration is a significant threat to the UV sector. That's why we are seeing Tesla pulling back and also more negative signals. Yesterday's inflation, the Fed officials acknowledged that the path to lower inflation is not straightforward, and the very negative signals are that those officials expect deficits, globalization, and aging in population to contribute to more inflationary pressure. So the geopolitics of US-China trade tensions are also pushing more pressure. I mean, the only positive signal between yesterday and today, it's basically that the US is the only advanced economy with GDP beyond pre-pandemic trend. And the labor market, it's cooling down because we are seeing initial jobless claims remaining low, indicating a strong labor market despite the job growth slowing. So that's some data. That's basically the opinion of the global landscape. It's also with market uncertainty. Fitch Ratings have warned that potential changes in the US post-elections policy could negatively impact also European sector. So there's a lot of things going around. But as you know, market is king, and market it's quite it's not looking good. Why? Because yesterday, as you can see, we tapped in this area, we tapped a new all-time highs and we quickly rejected. As you can see, I have here this inverse fair value gap that was not even tapped, but the usual manipulation in the overnight was pretty clear. A big move from the London Open to taking this buy-side liquidity and then chop, 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 and more chop. And the Open established this range of a failure of inverse fair value gap. The first fair value gap was a bullish one, but then we quickly reversed. And since that moment, I was hesitant to really take any of this. Why? Because basically we have overhead resistance. My first signal is to reclaim the fair value gap and then trying to take some kind of trend towards maybe attacking the 15-minute at 21,200, things like that. But as you can see, market it's really lackluster. Tesla, I was saying, the EV tariffs, look at this, minus 4%. Also Google being charged by the UL laws, and a lot of things going around for Google in terms of politics and it's like, as you can see, let me see, regulators crack down on Google. So the Nasdaq is quite weak. We are trying to hold these levels, but we are slowly but surely taking high time frame levels to the downside. There's a daily right here that I would like to see holding. Why? Because we have this structure here. We pushed on Trump election, and then look at this, we are chopping because no one knows the scope of the Trump policies. I tried to summarize for that, but there's currently a mixed bag of everything: geopolitics, inflation, policies for the new US president. There's a lot of things. You can see gold is really, really suffering. Copper, it's also suffering. These are all indicators. Banks are a mixed bag, with XLF basically just pulling back a lot, and also Russell. So you have uncertainty in the equity indexes, you have uncertainty in gold, copper, and basically those sectors that push the economy higher. You have the Russell also being lackluster. The only thing that maybe it's a little bit, it's the sector for semiconductors, but look at this. It's just chop, chop, and chop. The overall breadth is also feeling the pain on the weak side. So we just have to be really, really patient, because there are more days in the week, there are more days to come, and today is not a day in which there's clear direction. We are seeing a lot of volatility. Look at this candle. Look at this candle. So overall, my levels to watch is basically this first. Let's go to the narrative 15-minute. I need to see this 30-minute holding, or at least the daily at 21,000. We need to see 21,000 holding, and then tomorrow and after tomorrow we can reassess. But for now, nothing else from my side. That's all. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time. Remember, trading is just patience, discipline, and risk management sometimes. So focus on that and you will be successful. Stay safe, everyone, and see you tomorrow.